We got some bad news for mortgage rates last week. The Fed stated very clearly that the economy is not sending any signals that they need to lower rates in a hurry. And just like that, mortgage rates are now back above 7%. We did see a tiny increase in overall inventory this week, and new listings had a nice bounce back after the big decline last week. But overall, things are just starting to cool off slowly and steadily, as is completely normal for the end of the year. So if you happen to be in the market here at the end of the year, especially looking for new construction in particular, this is when you're going to see some of the biggest incentives and discounts given. But the trade-off is you're not going to have very many options to choose from. But we're covering all this and much more in this week's market update. My name is Michael. I own a local real estate brokerage here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends, we're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button, and if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that is in the description below. Okay, today is November 18th. Let's see what the data is telling us, and if this is an old video, you can click the playlist here to get to the latest weekly market update. First up is market news. On Thursday, Mr. Jerome Powell, the chair of the Fed, said the economy is not sending any signals that we need to be in a hurry to lower rates. As a result, rates are now above 7% again. And let me just read you some of what he said. We are moving policy over time to a more neutral setting, but the path for getting there is not preset. The strength we are currently seeing in the economy gives us the ability to approach our decisions carefully. Ultimately, the path of the policy rate will depend on how the incoming data and the economic outlook evolve. Meanwhile, the labor market, quote, is now by many metrics back to more normal levels that are consistent with our employment mandate. Then he added that the unemployment rate at 4.1% is notably higher than a year ago, but has flattened out in recent months and remains historically low, which is true. So he's basically saying what we've been talking about all along. Nothing is breaking. Why would they rush to cut rates and ruin the whole thing? Until the labor market actually softens, there's no need to cut rates. Another point of interest is interest rate traders dialed back their bets on a December rate cut. Prior to Powell's comments, the CME Group's FedWatch tool showed that 72% of interest rate traders expected the Fed to cut rates by 25 basis points. So before he spoke, it was 72% expected it, and now it's 58.7% expected. And those who expect rates to remain exactly where they are in December went from just 27.8% of traders to 41.2% of traders. So as of now, more than half of traders are still expecting a small December rate cut, but just barely. And obviously that's a huge shift if 72% of them thought and now only 58.7%. Big change. And another interesting data point we got last week was that during the third quarter, remember when mortgage rates moved down towards 6%, they got down to like 6.11. Mortgage origination volumes increased 17% quarter over quarter. And that's for 7 big companies, the big online lenders like Rocket Mortgage and those kinds of lenders. They surveyed 7 of those companies and they saw a 17% increase in origination volume that quarter just because rates dropped. And that's just when they got to 6.11. But like I've been saying, the real demand is going to come in at or below 6%. Okay, that's enough of that. Before we dive into the data, just in case you missed it, I made 2 neighborhood tours last week. The first one is a community I've sold to several investors in Fort Worth. There's just a ton of value there. You can get a really nice big house around or under $350K in a fully developed area. And right now they actually have a few of this one floor plan. It's like 2150 square feet. They've got a few of them sitting, so they are ready to give some deals on those. And if that's out of your budget, they also have smaller homes starting in the low 300,000s. So if you're thinking of investing or buying a home under 350K, make sure to check out this video next. The second community I showcase is one right here in Richardson, Texas, where I live, and so many people from Dallas have never even heard of this neighborhood. It's only 18 miles from downtown Dallas. It has an actual waterfall in it, tons of nature, easy access to Highway 75, beautiful homes, top-rated schools. It's truly one of the best neighborhoods in the DFW market. So if you've never heard of Canyon Creek, or even if you have and you've just never seen it, make sure and watch this video next. Moving on, starting with national housing inventory. This week we had a tiny increase of just 456 more homes for sale in the entire country. This gets us to just 27% more inventory than we had last year, to a total of 722,032 homes available for sale in the country. This same week last year, inventory was only at 566,898, so still much better this year. For reference, the all-time inventory bottom of 22, we only had 240,000 homes for sale. The peak of last year, we had 570,000 homes for sale. This same week in 2015, we had about 1.135 million homes for sale. So it is starting to look like mid-October was probably the inventory peak for the year, which means we are trending back towards a normal market. The last 2 years, inventory has gone up until mid to late November, but a normal market, inventory peaks much earlier in the year, sometimes as early as June or July. So we're trending back towards normal. Now looking at new listings, this week we had a nice rebound back up, all the way back above 2022 and 2023. After this sharp drop last week, of course, this was an election week, so maybe people just weren't listing because there was an election. Whatever reason, sharp drop, but this is why we don't trust 1 week data. We wait and look for trends. As you can see, we rebounded. We're back above both 22 and 23 levels, and we had 51,832 new listings this week in the US. And of course, the expectation is we're just going to trend exactly follow these two lines. Hopefully we just stay above. Now looking at pending sales, 4 weeks ago, we finally broke out above that 2022 line that we had been way under for the rest of the year. So we have more homes pending than we did either of the previous 2 years. So home sales are growing even with mortgage rates around 7% again. And as you can see, we're just doing a version of this slow trend downward to the end of the year. Hopefully we end up somewhere up here, although you can see 22 and 23 ended up at almost the same spot, even though there was a huge spread on them for the rest of the year. So I don't know. Hopefully we end up higher. But this week, 333,177 homes under contract. The last thing we cover nationally is the percentage of homes having price decreases. Every year it's normal for a third of homes to take a price cut before selling. Looking at the national chart, we stayed almost exactly flat this week. We're at 38.76% of homes taking a price cut this week. We still officially have less price cuts than we did either of the previous 2 years now. Last year we got as high as 39.2%. The year before we got as high as 43.2%. We peaked much earlier in the year this year as well. Again, that's really just trending back towards normal. And just so you know, if you want home prices to come down, then this number needs to be going up instead of sideways and down, which is what it's been doing. So housing prices are remaining very strong. Then looking at mortgage rates, you can see we've been over 7% since last week, 0.02, 0.01, 0.02, 0.05, and then today we continued upward. The average today on Monday is 7.08. So we are still climbing. And actually, let's check the 10-year. So very interesting. Looking at the 10-year, which is the mortgage rates most closely follow the 10-year, we can see actually the last 1, 2, 3, 4 days, we've pretty much not moved. So it's possible that when the average mortgage rate printed today, this might have been higher and now it's come down, but really the 10-year has been closing, well, at least the last 3 days. If it closes here, it will have been closing around the same spot every day. If it closes here and mortgage rates stay higher, all that means is the spreads actually got worse today. If you've been watching my videos, you know what that means. Otherwise, I don't have time to explain it today. But just know, it's not that the 10-year is actually going higher. That's the good news. This fluctuation in rates is being caused just by the spreads. If this number had continued up higher than this peak today, that would be much worse news than mortgage rates going up without the 10-year going up. That's what you need to know. It's not as bad as it seems. The 10-year is not going up. Now, regarding mortgage purchase applications, even with mortgage rates going up and being very firmly in the slowest season of the year, we actually saw a 2% increase this week in the number of people applying for mortgages. However, if you look at the previous 2 years, this is normal. We're following the exact same pattern. We just had this 1 week anomaly here. Don't know why, but otherwise we're following the same trajectory as the previous 2 years. But I've been saying all year, and I still believe this, there's no reason to believe mortgage demand is going to grow significantly with rates this high. Real demand comes in once rates get and stay at or below 6% for a sustained period of time. The evidence we have for this is that's what new construction has been at, below 6%, and they're still selling way more homes than the resale market. Okay, that's it for the national market. Let's move on to the local markets, starting with the MLS data of Dallas County. There were 531 listings last week. That's 43 more than last week. 266 closings. That's 4 more than last week. Of the homes that closed, 41 were immediate sales, meaning they contracted in the first week. That's 8 less than the previous week. But 259 homes went under contract, and that's 112 more than last week. But again, last week was an election week. People just seem to not do stuff on election week. In total, there are 2,043 homes either under contract or in pending status. That's 29 more than last week. Now moving on to Collin County, 376 new listings. That's 63 less than last week. 199 closed, 20 less than last week. 27 immediate sales, that's 24 less than last week. 146 went under contract, 25 less than last week. In total, there are 1,726 homes either under contract or in pending status. That's 13 less than last week. Okay, let's move on to the Market Action Index, starting with Dallas County. If you've never seen this, the Market Action Index takes into account all of this data, puts it into one easy to read graphic with a number. Anything a 30 or below is a buyer's market. Above that, we're asking how much of a seller's market are we in. All we use this data for is to see, are things looking normal or are they looking weird? What normal for this time of the year would look like is the market just slowly and steadily cooling off. Prices should be slowly dropping. Days on market should be getting higher. Everything should just be cooling. So basically, the Market Action Index has it right. This is what it should look like, a slow, steady trend down. So that looks totally normal. The only thing that really hasn't been completely normal has just been the list prices. So you can see the median list price has been a lot more sideways than the Market Action Index, which is going down. So typically at the end of the year, you would see something like this. And very quickly, I don't want you to be fooled by this, thinking if you wait to buy until the end of the year that you're going to be able to get this great deal, because the reality is, or the problem you run into is, yes, prices go down. The main reason for that is the homes that are available on the market today are the ones that have already been sitting on the market for months that nobody wanted, which means you're not going to want them either. And those homes will just continue having price drops through the winter as demand gets even lower until they finally get cheap enough for someone to buy. But for most of you, that's not helpful because you don't want those fixer-upper houses. So I don't want you to wait until the end of the year thinking you're going to get this awesome house at a discount. Awesome houses are still going to sell for top dollar. So if you want a fixer-upper, then maybe wait until the winter. Also, like I said, with new construction, you'll get the biggest discounts at the end of the year, but also, like I said, inventory is going to be lower, so you may not get the floor plan you want. So don't let that fool you. Just because prices are lower in the winter doesn't mean you're going to get a better deal on the house that you want. Okay, so that's been the unusual. Price has been holding up a lot more firm than usual. Same price of new listings. It's still just in this range that it's been in, has not broken down below that. Days on market is going up. That's normal. Median is holding steady, but this is normal. It steps up since it's median. Number of homes having price decreases as well has just been totally sideways. And again, that's tied to the price. If we want price to be going down, then price decreases should be going up, but it's not. So that's the only unusual thing. Price is holding up. Inventory is coming down just like we saw in the country. Inventory has already peaked and it's now trending down, so that's normal. And as we already covered, Market Action Index is showing exactly what should happen, a slow trend down. So Dallas County is looking pretty normal. We're having the same issue over in Collin County, where their market action actually for the last 2 weeks has been having a much quicker decline than Dallas County has. But the same unusual thing is the median price of new listings is actually trending up at the moment. Although the overall median list price is trending down in a nice, slow, steady way. That's looking normal now. The new listings are actually trending up, but a lot of that has to do with this is new construction. So there may be new higher priced communities coming up, and that's why that's trending up. So it's just a very different market from Dallas because so much of it is new construction. As well as the homes will sit on the market longer because a lot of the homes that are for sale now are only a couple of years old. So they're competing against new construction and trying to get a similar price to new construction. So this market can look a lot softer based on whatever builders are doing and charging. But their average days on market is continuing to climb. Their median has been steady for a while, but again, the trend is upward. Number of homes having price decreases, trending down. Same in Dallas, that's what's holding up the prices. You may think it's unusual that 5% of homes had a price increase. That would be in a normal market, but not in a new construction market. So this again is just showing you it is a different market. It has new construction. They're more likely to do price increases. Every few houses they sell, they then might raise the rest of the prices. And their inventory has been dropping a lot more quickly. Not this last week, but you can see ever since October, they've been having a real sharp drop off. And then of course their market action index is dropping quicker than Dallas now, but overall the trend is slow and steady. even though the last 2 weeks have been a little sharper. Okay, so mostly everything looks normal except prices are holding steady. Now taking a quick look at the pending sales. This is Dallas County. I just want you to see we still have tons more homes pending than we did last year. And we've been going a lot more sideways than we have down up until these last 2 or 3 weeks. But it looks like now we may have picked up that trend where we need to just go down for the rest of the year. Then looking at Collin County, I mean, if I'm looking at this thing, I still think that this week this is in an uptrend. If you look at the bottom of this one, the bottom here, the bottom here, and the bottom here, those are all higher lows. So at least for now, they're still in an uptrend, even though they've come down from this peak. And obviously a crazy more amount of homes pending now in Collin County than the previous 2 years. We're talking about 900 versus 1,600. That is such a huge difference. But again, Collin County's blowing up, tons of new construction. What else? So again, we're looking for things that are unusual in the market. This is unusual for pending sales to still be technically trending up in the middle of November. Okay, now we're moving on to the hottest and coolest cities and zip codes in all of Dallas and Collin counties, starting with the absolute hottest cities, and these are ranked using that market action index number we just talked about. Remember, a 30 or below is a buyer's market. So this week, Carrollton, Texas remains the #1 hottest. Actually, Carrollton, Coppell, and Grand Prairie all remain in the top 3 spots. Richardson heats up 4, Irving heats up 1, Louisville cools off 1, Lancaster remains, Balch Springs cools off 4, Plano jumps onto the list at number 9, Princeton cools off 1 to take the number 10 spot, and Saxe, which was number 10 last week, gets knocked off the list this week. Then zooming into specific zip codes, the absolute hottest is Hutchins 75141 at a 55.68, followed by Carrollton 75010, Dallas 75244, Plano 75093, Irving 75061, Allen 75013, Carrollton 75007, Grand Prairie 75050, Dallas 75223, Grand Prairie 75052. So if you own a home in one of these zip codes, you can sell for top dollar. Now moving on, exact same thing, but looking at the coolest markets, and remember 30 or below is a buyer's market, so everything below Salina, these are officially buyer's markets. So Blue Ridge and Sunnyvale remained in the 2 coolest spots. Then Leonard cools off 1, Anna cools off 1, Van Alstyne heats up 2, Salina cools off 1, Prosper heats up 1, Rockwall remains, Lavon jumps onto the list at number 9, and Royce City heats up 1 to become the hottest city on the coolest cities list. And then Nevada, which was number 10 last week, heated up off the list this week. Then looking at specific zip codes, and let's see, all of these except the last one in Salina are officially buyer's markets. So if you're looking for a house, these are the buyer's markets. Blue Ridge 75424 is the coolest zip code, followed by Dallas 75219, Sunnyvale 75182, Leonard 75452, Rockwall 75032, Dallas 75204, Wilmer 75172, Anna 75409, Van Alstyne 75495, and Salina 75009. As always, if you're looking to buy, sell, or invest here in the Dallas area, whether it's next week or next year, I'd love to connect. Call, text, or shoot me an email. Thank you for watching. I'll see you in the next video.